My base case year regarding Fed policy has been no Fed rate hike this year, and I'm expecting more QE next year. In terms of India, I'm telling investors that India, while I've still got a big structural overweight in India, the reality is for now that India remains a better relative story than absolute return story. It remains a good relative story because its macro position is much better than most other emerging market countries. It remains of all the bigger emerging markets, the biggest beneficiaries of lower commodities, lower oil prices. My view on oil is that it's a matter of time before it breaks below $40, so I remain bearish on oil. But in terms of absolute return story, the problem in India is that we still don't see any evidence of a pickup in the investment cycle. My major concern as regards the policy of the Modi government continues to be the lack of urgency displayed in addressing the legacy NPL issues in the Indian banking system. My view is that it's probably conservative to assume that about 15% of loans in India are stressed in one form or another. Most of those stressed loans are in the state-owned banks, and so long as that's the situation, that will delay a pickup in the investment cycle in India, and it means monetary easing will not be as effective as it would otherwise be. The earnings growth continues to be downgraded. The offsetting positive is that we've had significant rate cuts in India, and we will have more rate cuts on the 12-month view. So at the start of this year, I was saying a minimum of 200 basis points of rate cuts in India in 2015, 2016. We've already had 125 basis points of rate cuts, and my guess now is we'll have more than 200 basis points of rate cuts in 2015, 2016.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.